Welcome back to the Dividend Diplomats YouTube channel. You got your favorite broskies out here on the dividend investing universe. Bert, the Hurt, and Lanny. And today, guys, back to the podcast-esque episode, bringing you top headlines that hit the news press this week.
Smash that subscribe button. Give this video a thumbs up. Help you boys reach 20,000 subscribers. Also, guys, thanks for hanging with me in those last two videos. My power's back. It was out for 5 days. It came back today when we were recording it. So, yeah, that was fun. That was fun, and I'll save that for a different day. There are some fun little nuggets, though, life lessons learned in that. So we'll save that maybe a short, some things we learned about power of not having electricity in your life. But we're not talking about that today, are we, here, Lanny? We're talking about some big, major stories, major topics, and things that happened over the last week or are going to be happening coming down the pipeline.
Yeah. The stock pretty much market finished up for the week about 3.5%, 4%, 53.44. Again, we're filming this here on what is it, August 11th, guys, here at night, coming at you though on Monday morning for your fresh brew of the week. So the first big headline as we jump right into it has to do with streaming, guys.
Ooh.
Disney released before, I think in the early to midweek that hey, Disney Plus is profitable. Disney Plus is net operating income now, still growing their subscriber base. Obviously, we already discussed a little bit about Disney and their theme parks in the future, but Disney streaming seems to be doing well because Disney is also doing extreme cost cutting to help get there.
Yeah, and that's been what's interesting there is seeing what Disney, the action, and where the profitability is really coming from Disney. Because what you love about Disney is they're not just streaming; they're a little bit of everything too. They have the theme parks, they have all the content, the merch, everything you could possibly want for
The
Disney.
merchandise.
Yeah, that merch. But Disney Plus was the strongest, and it has been the strongest. And there are some holes forming in the other ones, the other weakest contenders. So it was great to see them turning in that profit. Manny, they weren't the only other ones showing a profit, though, were they?
No, yeah, pretty shockingly, Paramount, PARA, out of all freaking companies, also said that they have turned profitable
Hmm.
operating income on their Paramount Plus platform as they combined, I believe, the Max and the Paramount Plus to create just the one platform now for all their users. So and they're also predicting to be, again, that was just for the quarter. And then, by next quarter, I think they were predicting to be, still have net operating income on a year to date basis. So,
Yeah.
and they announced 15% of their workforce to be laid off. So,
Yeah.
Disney's doing a significant cost cutting layoffs. Paramount is doing significant cost cutting and layoffs. But what's your take on now on these big stocks, on these big public companies and their streaming?
Well, I think what we've learned is streaming is expensive.
Yes.
It's expensive to operate, it's expensive to run, and it's kind of going back to the old cable TV model where maybe you need more content on there, you need more in there to raise the prices and cover a lot of the costs that it makes to fund hits and misses because there are a lot of misses and a lot of shows that are produced that never make some money. I do think it's very interesting though that Paramount's executing the cost cutting and it's seeing some success there. So maybe it's just always been bloated and there was always that fat that could have been trimmed for Paramount.
Yeah, and who knows how long some of these deals and contracts were back during the
Mhm.
COVID years. We're like, oh yeah, we'll sign on for a 3 year, 4 year, 5 year, whatever year deal, and maybe they're finally coming out of that. Plus, obviously, when people are usually your biggest cost. So when you finally
Mhm.
start realizing you could do more with less, unfortunately, but fortunately for businesses, that usually means an impact to their bottom line, guys. So I expect more to be done in that arena. Think
Yeah.
Warner Brothers Discovery. I could see them trying to get to some sort of everybody's doing it. So now, hey, sign up, get up there.
Mhm.
Apple,
Mhm.
Amazon. You just think of the big Netflix, the big players in the streaming. Obviously, Amazon has way different avenues, and Netflix is already, the leader of the pack here. But at least now it's the norm to cut as much cost as possible to
Yeah.
squeeze as much dollars as you can.
Yeah, and I also think the interesting thing in this too is I think we were texting about this earlier in the week, Lanny, where it was Netflix picked CBS Sports to run its football streaming. So Netflix is the one that got several games in the NFL. They paid a lot for them. And that's great for Paramount, but that's also telling in this sector too, where maybe Netflix 2 years ago is like, we're going to do our own production. We're going to put up our own set. We're going to have our own studio. We're going to run our own cameras, try this ourselves. Netflix, all right, let's just go with the pros. Let's subcontract this out to CBS Sports, Paramount. Rather than incur the cost ourselves, we'll just pay someone, not deal with the headache. And that's, I think, what you've learned with a lot about this streaming service too.
Yeah, I agree. So I'm excited to see what other companies will do to follow
Yes.
suit, guys. All right, now we're going to pivot to another industry here. Let's talk a little bit about real estate. So, mortgage rates have now finally come down a little bit, obviously, with all the news about economic data, lower inflation, lower amount of jobs, slight increase in the unemployment. That sent all treasuries tumbling down, obviously solidifying more than likely a Fed, rate cut come September. But and with that, mortgage rates finally have come down to I believe they're calling it the 15-month low to 18-month low, the lowest point essentially since May of 2023.
Yeah, every week that goes by, you tack on another 3 or 4 months for how long the low is going to be, because it's great to see the interest rates are dropping. But it's interesting. It's interesting to see that you haven't seen this burst of new homes that are hitting the market yet. So rates have fallen so fast, people are now just getting themselves together. They're trying to figure out what they want to do. People that weren't necessarily considering moving are now considering moving, but it's not exactly a fast process. Just pick up and sell your home. You got to prep it, stage it, hire the real estate agent, get the pictures out there. It's a process. It's a 2 to 3 week process to get your house out on the market. So there's this period of low interest rates, low inventory that's kind of hitting the market hard right now.
Yeah, and kind of if you look at what realty income has done over the last, I don't know, month, or up 10%. Realty income is back up over $60 a share. So all you investors out there that were buying in that 48 to $55 range for the last year plus,
Mhm.
you're starting to see a little bit of the fruit from that sort of holding, right?
Yeah, yeah, that's a great one too. The
It's
interesting thing I also want to see with this is a lot of companies were offering, while mortgage rates were above the sevens. You get like SoFi, I know, offered the whole refinance with us. You get one free refinance in 3 years where you don't have to pay any fees. You stay with SoFi, we'll refi you and get the current market rate so you can benefit from it. So I'm curious how much refinancing activity we're about to see, or are people going to wait a little bit longer, gamble, see if rates keep coming down further before they pull the trigger on the refi?
it's funny the fact that you already brought that up because in the article I was reading, refinance applications are way up, which means I think I'll say a lot of local places were also offering that, free refi within by 12/31 of this
Mhm.
year. So just get your mortgage now. We'll handle a refi for you later because we know it's coming. You know, you're going to do it anyway. So it's like
Yeah,
it was a great marketing thing to
very
get,
good.
say if you had 100 people out there to buy a house, if you were able to get 20 people more than you would have if you didn't market that you would do a free refi, you know, they were like, yeah, we'll take all that interest income anyways because
Yeah,
you're going to
exactly.
stay with us.
Yeah, save on the fees, save on having to then originate another one. It's beautiful. It's a great move. And you're about to see this is going to be a fun quarter to watch, especially when those earnings releases and 10Qs start coming out for banks and the fintech players out there.
Exactly. All right, now third, oh yeah, let us know, guys, if you've been buying a house,
Mhm.
what you're seeing in the real estate market. We'd love to see that. All right, but big news here. Let's dive into the hedge fund arena. Bill Ackman, one of the largest well-known billionaire, obviously hedge fund investors out there. 60% was the headline of his hedge fund is wrapped up into only three different stocks, guys. Heavily concentrated, heavily weighted, 60% three stocks. And
That's
Bert, what are
amazing.
these three stocks?
That's amazing. That only three stocks make up 60%. You want to do them one? We'll do 3 to 1. Number three, Hilton Worldwide at 18.6%. Number two, Chipotle with 19.5%. And number one, Google Hilton/Alphabet, whichever company you want to call, whatever the name is, at 22.1%. That's incredible, Lanny. Did not
Oh,
realize.
it's true. It's damn true. Yeah, so they're going for, you at least could say like two higher growth stocks. Hilton, I think more so is just so they can start maybe forcing some change over there.
Mhm.
But yeah, I mean, going in the high growth space, obviously Google/Alphabet isn't going anywhere. Chipotle is just firing and has been firing all cylinders for the last few years. Obviously, they just did their stock split, and then they're just dominating the industry after that as
Yeah,
well.
you think you got those Hilton honors points with that stock purchase there with Hilton? That's incredible. I mean, yeah, if it's not going to be a growth stock, you might as well pick one of the top two the hotel chains out there. If you're not going to pick Marriott, you're going to go with Hilton.
Exactly. All right, Bert. Yeah, let us know if you guys have heard of Bill Ackman, what you guys think of those three stocks as well. All right, the big drum roll on the fourth item here. We won't talk too much about it, but this is a little throwback to my first car that I ever drove. So back in the day, Bert actually met me through driving on, we worked at the same company and we were on a client together out in the middle of PA. And we drove my 1997 Toyota Celica that had well over 200,000 miles on it.
Love it. It couldn't make it up hills. It's decelerated by the time it got to the top of a hill, picked
We
up
made
speed
it
and
though.
went down. It got up there. You might have entered the bottom of the hill at 70. By the time you got to the top, it was down to what, 50? But hey, it got you there in one piece, and that's all that really matters. So why are we bringing up this Toyota Celica, Lanny? Why is this on our big news story of the week?
So Toyota is teasing some big rumors right now out there that the Celica is coming back. They stopped making the Celica, I believe, in '05/'06, but now there's a rumor that the Celica, after 20
20
long
years.
years of waiting, is back, baby. So,
Mhm.
my Honda Accord is pushing 170, 175,000 miles right
Then
now. So
is another Celica in your future? We'll see. All right,
we'll
everyone.
find out.
So those are the four stories here. Streaming wars are heating up with profit. Mortgage rates keep falling. Bill Ackman isn't quite as diversified as you'd think. And then Lanny's getting another Celica. Let us know what you think of these stories down there below.
Guys, smash that subscribe button. Give this video a thumbs up. That was Bert. You know what, Bert? All right, I'll say it. If you guys are watching out there, you're either with us or you're against us, Jack. That was Bert and Lanny from the Dividend Diplomats. Over and out.